Good day traders, this is Stefanos on behalf of Tixee, and in today's video we'll be giving a look back of the market for the week of 17th of January until the 21st. Please note that all of the ideas discussed in this webinar are my own opinions and do not make up for any form of investment or trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products or instruments, or whether you use any kind of trading strategies. Any information that relates to past performance is not indicative of future results. So, kicking off today's video, we're going to be talking about stocks mainly. Obviously, we'll cover the rest of the market class as well. But if you've been staying tuned to the past couple of webinars we've been releasing the last 2 weeks, you will have known that, for example, we have the earnings season in full swing in the US. So this week, it was quite an eventful one with regards to stock price movements. We had mentioned in last week's outlook that we had a number of important companies reporting their Q4 earnings, which were something to look out for. Specifically, we had Goldman Sachs, we had Bank of America, and we also had Netflix. So looking at your tixee web trader, you can search up for all of these assets and you can just have a quick look with regards to how the prices performed throughout the past week. So if we just look at Netflix as the very first one, I'll just search for it here and pull it up. I'll switch. We have the 1 week time frame, and at first glance the first thing you're gonna see is this huge red candlestick right here. So if you weren't really paying attention to what happened with regards to the earnings call, Netflix share fell by as much as 20%. Citing a slowing subscriber growth, which took the company back to 2020 COVID era levels. If you also zoom out, you basically see where we are with regards to 2020. We're basically pretty much sitting about at this level here. So let's also not forget the fact that Netflix mentioned that they were looking into increasing their prices of their subscriptions, which can also be something that could further pressure their stock price in the future. Additionally, the company mentioned that for the first quarter of 2022, so where we are right now basically, they expect to add 2.5 million subscriptions, which comes in stark contrast with regards to the almost 4 million subscriptions that they added in Q1 last year. So this is with regards to the Netflix prices and the reason as to why we had this much of a sell-off for the share price this week. On a similar front, Disney also fell by 4%, so not quite as much as Netflix, but we can see the industry similarity with regards to how prices can move. So yeah, this is pretty much about Netflix. Now, like I mentioned, we also had Bank of America and Goldman Sachs. So I'll pull up Goldman Sachs first. Let me just pull up the charts. You'll see this pretty strong dip as well with regards to Goldman Sachs. The prices gap down right here. And with regards to the earnings call, they mentioned that they had a surge of up to 23% with regards to the bank's operating expenses. Part of it being that they're offering a higher pay to their employees. As we can see also, most of the major US banks, they're looking to hire and retain top talent in Wall Street. And again, if you had tuned in last week, we had something similar with regards to Citigroup and JP Morgan, who were some of the first companies to report their numbers. Their share prices also fell due to higher operating expenses. So we can notice like this common theme between the major US lenders as they're fighting for top talent on Wall Street. So Goldman Sachs prices fell by 7% on Tuesday after their Q4 profit was also below the analysts' expectations. And picking up from that and following on, we had Bank of America, whose expenses also rose. So again, we can see this recurring theme with regards to the banks, reporting higher expenses overall. So if I just switch to Bank of America, we can see that prices also fell for Bank of America. Now their expenses that they reported, they were pretty much, they rose by 6%, which is not as much as Goldman Sachs 23% or 11%. We had the share price rising on the day of the earnings call. However, we can see overall on the week they're also down, again pointing to this similar theme with regards to the industry. So we had the financial services industry, and we had Citigroup, JP Morgan, Goldman Sachs, all falling after reporting their higher expenses. So we can see Bank of America is also following a similar pattern with regards to the share prices falling on the week. So yeah, this is with regards to the financials. We can see overall the markets have been quite active with regards to the stocks front. And we also have, don't forget, we pretty much just begun with the earnings season. So we will be having a lot more companies reporting their numbers, and namely next week we're going to be having some more big companies which are going to be more on the tech front. So we'll be having Apple, Microsoft, and Tesla, which are all companies to look out for with regards to when they're reporting their numbers and the impact that they could have to the market, aside from the impact on their own stocks performance. So yeah, this is pretty much with regards to the stocks. Now we're gonna move on to Forex. Things were somewhat quieter in the past week, without too many market driving events. We did have the German sentiment indicator crossing for the first time above 0%. Now again, all of these numbers, by the way, you can also go to tixee's website, and if you look at the education and research tab, you can click on the economic calendar, and you'll be able to basically filter out all the events you want to look out for, whether it's just for today or this week, for example. And then here you can use a filter, the high impact event. And you can see here we had the economic sentiment index for Germany, which took place on the 18th. So again, it did cross above the 0% level, which hadn't happened in quite a while. But the thing is, it did little to push euros prices higher. So if I switch to the euro dollar real quick, just so you can also have a look. So we can see on the week, if I just zoom in a little bit, just zoom out. So you can see here on the week where this little red dot is, the prices of the euro dollar did fall. So like we said, despite the fact that the sentiment indicator rose above the 0%, it did little to just push the euro higher. Overall, the pair fell by 0.64% on the week. And if we just want to add a couple of indicators just to get a little bit more clarity as well. So I'll just add in the RSI here. I'll keep the level at the 14. If you want to switch the level, you can just hover your mouse over the RSI line, right click, edit settings, and you can just play around with the settings here depending on your personal preference, but I'll keep it at 14, which is the default one. And I'll look into adding a moving average. Again, the same thing, by default, it's gonna default to a 50 period simple moving average. But if you hover the mouse, you can see in the top left, you can see the parameters there, and it has an instruction where it tells you to right click on it, and then you can see, you can edit settings. I'll switch this one to a more sensitive one, which is gonna be the 21, and put the exponential. So you can see prices for the euro dollar are sitting firmly below the 21 period EMA, and if we look at the RSI, it is also below, well below the 50 mark. It's currently sitting at 38. We had, I would say the GBP USD was more of an interesting pair to look out for the past week. We had employment data for the UK. The employment data did come out solid, with the unemployment rate falling and coming in at 4.1% compared to the 4.2%, which was the expectation. So I mean, it wasn't a huge drop. I mean, again, the increase was expected to be 4.2. It came in at 4.1, so 0.1% deviation, which is not that strong. And we can also see as to how this didn't push the pound prices any higher, because let's not forget, we also had the inflation rate hitting a 30-year high in the UK, which is now sitting at 5.4 year over year. Now, just to give some context with regards to inflation rates, usually the benchmark tends to be around 2%, which is what the banks aim to keep it at. So a 5.4% is quite substantially higher than the 2% benchmark. Governor Bailey also expressed concerns around the inflation levels in the UK, and he gave a pessimistic forecast for the next set of reports that are going to follow with regards to the UK. So overall, we can see that pound dollar also pushed lower. We also had UK retail sales, which also returned a fairly negative figure, further weakening the pound. So overall, the pound dollar fell by almost 1%, which may not sound like a lot, but in the Forex side of things, it is quite a bit. And if we want to put it in pips measurement, it was 130 pips down on the week. It's now you can see that it's sitting right on the 21 period EMA. And it's looking like it wants to break below it, but again, the week obviously still hasn't closed yet, so we'll see with regards to the next week's open where the price is going to be sitting, and the RSI is pretty much almost at the 50 level, currently sitting at 49. So this is pretty much with regards to Forex. We're going to move quickly on to gold, just to have a look at some commodities as well. Now gold, it rose by as much as 0.8% on the week. You can see here it broke above the $1,800 mark, and it is also sitting well above the 21 period EMA and the RSI at the 56 level. Now it's important to remember how significant round numbers are. So I mentioned that it broke above the $1,800 mark. Now this is something that we can save for another discussion, perhaps a future webinar, the importance of round numbers. But yeah, this is pretty much the case for gold right now. Now, despite the fact that we had surging rate yields in the US, gold is holding its ground, as we can see, on the face of geopolitical uncertainties, with the situation between Russia and Ukraine still being unclear. With regards to the technicals, like I said, it's sitting well above the 21 period EMA. Now, whether it looks to retrace or not, we have a resistance level up here, which is the 1866 mark. And again, the RSI pretty much sitting above the 50 level, now at 56. And lastly, we're going to look into oil as well. So let me just switch to that one. You can just refresh the chart a little bit. So we can see oil, it had a pretty strong move this week. It rose by as much as 4.5%, which we can see is like the top of this week. However, you can see it's now given back most of its gain. It's up about 0.5%. The oil inventories report, which you remember this week, it came out on Thursday. We did have the US public holiday on Monday, which could be one of the reasons why it was pushed by a day beyond. So yeah, it was sitting, the oil inventories, they showed a minor build. However, a possible explanation to the rally of oil prices was the fact that we had two deadly Houthi airstrikes at the beginning of the week. Obviously, in situations where you have events pointing towards war or something similar that has to do with that, we can see oil prices surging. Now, with regards to the technicals, we can see it's sitting well above 21 period EMA. You can see the moving average actually at this level. Prices are up here. We can see here the prices previously dropped from this level quite strongly. So it's going to be interesting to see next week how the price reacts depending on the close of this week's candlestick. With regards to the RSI, it is now sitting also well above the 50 mark, now at the 65 level. So yeah, there you have it with regards to this week's review. We can see we had quite a number of events across different markets, specifically on stocks with regards to earnings, and also with oil and geopolitical tensions. Like we mentioned, don't forget the fact that we have Microsoft, Apple, and Tesla reporting numbers next week. So it's obviously going to be something worth looking out for. So yeah, that's pretty much it. I hope you enjoyed today's video. I wish you a good trading week next week, and have a relaxing weekend ahead. Till then, take care.